Hi and welcome to another episode of Tax and Business Matters. I'm your host, Emily Gray. We will look at the 12 hot spots on your return that can raise the chances of scrutiny by the IRS. Ever wonder why some tax returns are audited by the IRS while most are ignored? The IRS audits only about 1% of all individual tax returns annually. The agency doesn't have enough personnel and resources to examine each and every tax return filed during a year. So the odds are pretty low that your return will be picked for an audit. And of course, the only reason filers should worry about an audit is if they are cheating on their taxes. However, the chances of you being audited or otherwise hearing from the IRS can increase depending upon various factors, including whether you omitted income, the types of deductions or losses claimed, certain credits taken, foreign asset holdings and math errors, just to name a few. Although there is no sure way to avoid an IRS audit, you should be aware of red flags that could increase your chance of drawing some unwanted attention from the IRS. Let's take the first 3 out of the 12 on the list. Number 1. Failure to report all taxable income. The IRS receives copies of all 1099s and W-2s that you received during a year, so make sure that you report all required income on your tax return. The IRS computers are pretty good at matching these forms received with the income shown on your return. A mismatch sends up a red flag and causes the IRS computers to spit out a bill. If you receive a 1099 for income that isn't yours or the income listed is incorrect, get the issuer to file a corrected form with the IRS. Number 2. Returns claiming the home buyer credit. First-time home buyers and long-time homeowners who claimed the home buyer credit should be prepared for IRS scrutiny. Make sure you submit proper documentation when taking this credit. First-time home buyers have to attach a copy of their settlement statement to the return, including records of property tax and insurance coverage. All claims for this credit are being screened. As of May 2010, more than 260,000 returns had been selected for correspondence audits, because filers did not attach the necessary documents to their tax returns, and those numbers will continue to grow. Also, the IRS has ways of policing the recapture of the home buyer credit. Generally, the credit is required to be recaptured if the home is sold within 3 years for homes bought in 2009 or 2010, and within 15 years for homes bought before 2009. The IRS is checking public real estate databases for sales of homes in which the credit was taken. Number 3. Claiming large charitable deductions. This comes up again and again because the IRS has found abuse on audit, especially with those taking larger deductions. We all know that charitable contributions are a great write-off and help you to feel all warm and fuzzy inside. However, if your charitable deductions are disproportionately large compared to your income, it raises a red flag. That's because the IRS can tell what the average charitable donation is for a person in your tax bracket. Also, if you don't get an appraisal for donations of valuable property or if you fail to file Form 8283 for donations over $500, the chances of audit increase. Be sure you keep all your supporting documents, including receipts for cash and property contributions made during the year, and abide by the documentation rules, and attach Form 8283 if required. That's all for now on the IRS audit red flags. We will discuss the rest of the list on the next shows. Check on the programs you missed at www.howtodouryourowntaxes.com. Please do join me again next time. I'm your host, Emily Gray. Goodbye for now.